Hello, I'm Leo Wang, and today we're analyzing the significant turbulence hitting the global markets. The primary driver of this volatility is the announcement of new hefty tariffs targeting key trading partners, including Japan and South Korea, set to take effect on August 1st. This move has sent shockwaves through the financial world, causing major indexes to close sharply lower as fears of an escalating trade war return. My analysis shows this will likely have a negative impact across several sectors, particularly manufacturing, technology, and automotive industries, while also putting pressure on the South Korean won and Japanese yen. The core issue is the potential for disrupted global supply chains and increased costs for consumers, creating a bearish sentiment across the board. This economic uncertainty is also being felt in the domestic housing market. Recent data reveals a startling trend. Home delistings surged by 47% in May compared to a year ago. This indicates that sellers are increasingly choosing to pull their properties off the market rather than accept lower prices, signaling a distinct cooling in real estate and potential downward pressure on home values. Amid these pressures, all eyes are on the Federal Reserve. Economic forecasts now suggest the Fed may cut its policy rate as soon as September, earlier than previously anticipated. While lower rates could stimulate the economy, they also risk fueling inflation, which currently stands at a 2.4% annual increase as of the latest consumer price index reading. Finally, this complex policy environment is creating a mixed bag for specific industries, such as the solar sector. Some companies like Sunrun and SolarEdge have received positive analyst outlooks due to favorable interpretations of recent legislative adjustments regarding investment tax credits. However, other firms, like Enphase Energy, are facing significant headwinds directly linked to the new tariff announcements. In conclusion, the market is currently defined by caution. The key risks to watch are the escalation of trade disputes, the Federal Reserve's next move on interest rates, and the ripple effects of these policies on both corporate health and consumer behavior.